We have one more week in the data where the cold and snow in the eastern U.S. has held the market in deep freeze. That big storm really put a damper on the housing market. It seems we're finally thawing out, though, and as of now, though, inventory is down, new listings are down, the weekly pending sales are down. For the second week in a row, those newly pending contracts came in below last year. It's totally normal to have some ups and downs in the data, but it's time to see some of those up weeks come back. So I'll show you some brand new data today that really illustrates why I think this looks like a weather trend rather than some other rejection by home buyers, and why I'm optimistic that the spring has some growth in home sales ahead of us. Meanwhile, prices came in a bit stronger this week with the weekly pending prices just 1.7% over last year at this time. Home prices are staying roughly flat compared to last year, depending on how you measure prices. Some are just above 2025, other measures are just below 2025. This seems likely to continue. Even though I expect unit sales to climb in 2026, I haven't seen any data that indicates prices climbing. We're still forecasting essentially unchanged prices for the year 2026. So I'm Mike Simonsen. I'm the Chief Economist for Compass, the largest real estate brokerage in the country. I do these videos every week because the signals about the real estate market are always changing. And very often the data surprises us. So let's look at the data as we're now already in mid-February 2026. So let's start with inventory today. There are now 691,000 single-family homes on the market and another 200,000 condos. That's only 8.2% more homes on the market now than a year ago. That total count of homes on the market inched up just a fraction of a percent this week. And in fact, an available inventory of unsold homes on the market dipped starting a few weeks ago with the big storms and has not yet recovered. Maybe by next week, the thaw for some of the country will start to be visible in the data. Last year, because mortgage rates were 100 basis points higher, inventory was rising in February and would continue to jump in March and through the second quarter. That pattern is not repeating itself now. Inventory growth is staying relatively slow. So despite the fact that homes for sale in much of the Sun Belt are at or near record highs, a big section of the country still has near record low inventory. So if you just look at Florida or Texas and think there are a lot of homes for sale, you're missing the overall pattern. Overall, the country still has fewer homes for sale now than at any time in the 2010s decade. I have the 2019 highlighted in orange here. Overall, there still aren't that many homes for sale, and inventory is not growing very quickly. Even in the Sun Belt, inventory growth has slowed way down. Florida has fewer homes for sale now than last year. I've highlighted here blue at the left end of the chart. That's 2026 taking shape. The purple line is from last year. You can see that there are slightly more homes for sale now than a year ago across the country. Since inventory grew quickly in the second quarter of 2025, and mortgage rates stayed stubbornly high at that time, at the current pace, we could see year-over-year decline in inventory nationally by maybe June. That's not guaranteed, but it should inform your expectations for how the housing market is likely to behave this year. The new listings levels are coming in right now with 5% fewer sellers each week than a year ago. Again, this looks to be driven by the cold and snow of the last few weeks and should rebound, hopefully starting in next week's data. There are 54,000 new listings for single-family homes this week and another 15,000 condos in the most recent data. That's more than 22, 23, or 24, but fewer than a year ago. So in this chart, I have a line for each of those recent years. I'm using a 4-week rolling average here, and at the left end of the chart is the blue line for 2026. If we're lucky, we'll see the blue line shift above last year's purple line in the coming months. That would be a signal to me of a healthier, improving market. We want more sellers so more sales can happen. On the other hand, if there were a lot of sellers flooding into the market, That would be a very different signal, potentially a negative push for home prices. There is no sign of a lot of inventory heading our way this spring. None. I've been sharing the relist rate recently. This week, there are now 77,000 single-family homes on the market that have been relisted after being withdrawn last fall. That's a 1.8% increase for the week and is 14% more than last year at this time. So we are getting some inventory from the relists, and yet overall inventory is relatively flat. There just aren't that many sellers. On the demand side, we saw pretty reliable growth in the weekly pending home sales through January. After the storms, though, the weekly pending home sales have lost momentum and are now basically unchanged from last year across the country. I expect that to rebound a bit, but the rebound is not yet visible in the data. And here's why we can see what to expect in the coming weeks. This year, we can see sales improvement in the western U.S., where it has been unseasonably warm with no snow, pretty clearly. The eastern states are definitely behind the curve. While I expect home sales to resume growth over 2025, the demand signals are not all rosy. NAR reported low January sales last week. I suspect that's a function of the storm messing up the final weekend of January when a lot of sales close. It could also be a function of their seasonal adjustment algorithms, which, by the way, had December way up before January down. So the NAR data doesn't jibe with our weekly numbers, so I'd take that one with a grain of salt. There's another metric I track, which we call immediate sales. These are the homes that get listed and go into contract within a few days. When there's more buyer competition, more sales happen immediately. So buyers want to jump on a deal when they have a chance. So this year, even though we've been tracking more pending home sales, the immediate sales number is still below 2025. So taken together, this data shows us that sales will likely keep climbing in 2026, but those gains are very fragile. Any big weather or big economic shift could easily derail any recovery. And that's why we track the data each week. So here's why I think the sales slowdown of the last few weeks is mostly weather related. The western U.S. is actually still showing pretty strong sales growth over 2025. The further north and east you go, the more buried you got, and the sales are coming in below last year. So in this map, the red regions have pending home sales less than 2025. The bluer regions have home sales above last year. The map looks pretty identical to the record cold and snow in the east and the record warm and dry in the west that we've had for several weeks. You can see here the southeast currently has fewer pending home sales now than the same period in 2025. Interestingly, though, Florida is positive by 6%. So the slowdown in home sales in the southeast really came from Virginia, Georgia, North Carolina, and that's from the last couple of weeks only. So I think this illustrates why, as the country thaws a bit, we'll see the eastern states start to show sales growth like the western states. Will that be visible in next week's data? Does it take into March? I don't know exactly the timing, but we'll have to keep watching. Keep in mind, sales growth will still have a cap in much of the Midwest and Northeast, even after the weather improves, because these are parts of the country where there's still very few homes for sale. So I expect those regions to turn positive, but not bright blue like Utah is here, for example. There just aren't enough homes for sale in Chicago or New Jersey, for example. Meanwhile, the median price of the newly pending contracts ticked up this week to $394,000. So why do home prices increase some weeks when sales are sluggish? Well, it could be the best homes with the best demand, get a little more relative momentum. Homes are more expensive in California, and I showed you how California's sales, pending sales, are ticked up nicely this week. That's why this price number can show an uptick while the sales numbers are down. But in this chart, we're looking at the homes that go into contract pending each week. This is the median price of the newly pending contracts. This is the price that people are paying for homes. So by this measure, prices are 1.7% above last year at this time. The other price measure I've shared a lot lately is asking price per square foot. That one is 1.6% below last year. So that's the range, +2 to -2. Home prices are nationally are basically unchanged from last year. Depending on how you measure, prices are a little above or a little below. And I showed you why I expect home sales to pick up in the next few months. On the other hand, I have not seen that data that convinces me that this improved demand for homes is resulting in home price appreciation. So the price reductions data is slightly improved this week, so that's indicating slightly improved demand, but it is not indicating a major price changes up or down. We're still forecasting, therefore, that home prices for 2026 will be mostly unchanged from 2025. That's been true so far this year, and it looks to continue. Like the home sales number, I view this trend as pretty fragile, so prices could drop quickly if we had bad luck, for example, and mortgage rates jumped again. So stay tuned for that. All right, that's all the data we have time for this week. More next week when we'll see if a thaw in the weather leads to a thaw in the market. Stay tuned.